Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. Happy Thursday. Still kind of slogging through this first week of the year, this first week of January. And remember, we have a couple of things that we are dealing with in terms of data. We saw the post FOMC minutes reaction. Clearly when you have hawkish type language coming from the Fed, equities are not going to like it one bit. And then we also have what's been happening by way of anticipation for the jobs number, dealing with the ISM manufacturing and today's ISM services number. So a lot to deal with. And, I think one of the things that has been really interesting, two main observations of the last 2 weeks, the prior week and this current week, and I like to mention these things because a lot of times we feel that, are we doing something wrong personally? Right? We start to internalize our struggles in the market. So I'm going to tell you, the last week and this week have been very tricky in terms of intraday clarity. So have there been a couple of days where the markets continued? Absolutely. But it's been a little tricky Puppy, we're in the middle of the show. I got the dog I don't know if you can see her. Yeah, I got the dog in the office today. Dog sitting and cat sitting. So we'll see how that goes. So first of all, I think it's really important to mention that the lack of clarity has been kind of tricky in terms of, a couple days like yesterday, post FOMC, we saw a lot of follow through, but it's been kind of tricky intraday. The other thing is we're dealing with a lot of chop, right? Now, if you have in the past struggled with chop, it's two things. One, and I'll leave you with this, and I'm sure we'll touch on this in upcoming Charts and Coffee shows and in the rooms and everything else. But, the question is, it's really simple. How are you recognizing chop? What tools are you using? I use the JT multi down here. We went into chop really by the second group of yellow blocks. So this is what Charles Dow talked about. This is what he talked about all those years ago, a century plus ago, which is understand the underlying market trend. No indicator works great in all market environments. That's like saying we can golf the entire 18 holes with a 7-iron. You might be able to do it, but it's not going to be as effective as playing the right club for the shot, right? To use my golfing analogy. So if we always let structure dictate strategy, and in strategy meaning also indicator choice, now it makes sense. You say, gosh, I've accumulated a lot of indicators over the course of my trading career. And this goes back to sort of that old saying, why do Eskimos have, I don't know what it is, 68 words for snow? Because there's nuance. And would you please stop crying? Please, lay down. Down. That's the dog having a moment. So if you're wondering, how have I accumulated all these indicators over the course of my career? Because it's actually a really good sign. You're starting to see the nuances in the different market environments. And then you can pull the right club from the bag. All right. So that's just kind of my way to start off the chat, which is if you're struggling right now, it's a little tricky. Let's get past non-farm payroll. And I think we're going to start to see a little bit more clarity. And if you caught the video I did, I believe it was Friday, the Building Good Habits for 2022. It's right back at the Simpler Trading YouTube channel. If you caught that video, I talked a little bit about the January tendencies. And right now we're following them pretty darn well. So that means we see a little bit of a divot in the early part of the month. And then we're actually pretty clear sailing till about mid-February. That's seasonal. It doesn't mean that's what's going to happen. You want to focus on markets that are already trending, double green, as we say. But we do have some really interesting setups that could come along after we get, this FOMC and non-farm payroll volatility. So, keep your eyes open. Don't get too frustrated too quickly. The year is still just getting its sea legs. All right. Okay. So, um, first question up is Hisham asks, all right, would love your thoughts on gold's free fall. Do I see a rebound around 1760? Or will the overall market continue to sell it off? Okay, so let's dive into the process that I was just explaining. Step number one, structure before strategy. That includes indicators. All right, so we've been choppy since mid-November. Lower row of the JT multi. By the way, what is that measuring? I don't want to ever be a black box to you. 8, 13, 21, 34 EMAs. That's what that's measuring. What is the structure? What is their relationship to one another? We separate out the 8, 13, 21 from the 34. I love the 34 if you follow my work because I have the 34 EMA wave, right? The grab candles also built on the 34. So that 34 I separate, and the 8, 13, 21 are on the top. So we separate that sort of shorter term sentiment and momentum from the trend, which I think is much better suited to be measured by the 34. Okay, so non-trending market. The overall idea that when you're in chop, like I said, which we have been since in here, is that you're constantly going to be bouncing from overbought to oversold. Maybe not this consistently and evenly, but this is really an overbought zone. We've topped out here previously. You can see that since about, let's see, right here, and you can also say right about here, we've been looking quite overbought. Those are the two areas where the slow stochastic. Look, if you've been following my work for any length of time, there's three indicators that I've kept an eye on, three classic indicators: MACD, CCIs, and a slow stochastic. In fact, we even have a little label for them. We've had them for years. Here you can kind of visualize what's happening in this area. Okay. By the way, I walked you through how to set that slow stochastic up in the video. I guess it's about a week ago, maybe. So you can check that out. It was a crude oil video, how to trade the chop in crude. You can check that out there. All right. So all that being said, we're gonna have to wait for an oversold area. Look at the Darvis. I think I like your 1760 area. 1760 to probably down to about 1753. So thanks for the question. No indicator can foresee what the Fed will say. I agree. However, we never know what any, Marco, to your point, I think any kind of trading that sort of assumes that we can know what's going to happen. I wake up every morning and there used to be a sticky note on my desk here stuck to one of my monitors that said, I don't know what's going to happen today. I don't know where price is going, but I do know what I want to do when it gets there. In other words, we're always counterpunching. We're always going to be reacting. We're always going to be looking at price to get to a level that means something to us. Think about it as being a batter and you're waiting for the pitch. I don't know what please, puppy. I don't know what the pitcher's going to throw. It's not going to be something that they want me to hit, right? But I do know what I want to see. I do know ultimately where my best zone is going to be, right? So that's what we always want to focus on. And I've walked you all through this one before in the rooms, which is know the way in which, and this is going to be at the CME site. The CME, Chicago Mercantile Exchange, has something called the FOMC countdown that measures the Fed funds futures. It measures the Fed fund futures. And so by measuring the Fed fund futures, what we're able to understand is what has the market. I'm on the site right now. Just Google CME FOMC countdown and you'll get this link, the site. We can know what is expected. And that's where the game is happening. So I completely appreciate the comment, but we can measure things to get a better idea. We just have to know where to look, and that's a really effective place to do it. All right, next up, Chris asks, what is my take on crude oil with the civil unrest in Kazakhstan? Big move overnight, now looking at $80. All right, so yeah, crude has not been, crude's been choppy, and we're seeing a lot of news, whether we remember we had OPEC this week too. So I'm not just going to say it's Kazakhstan. It could be Kazakhstan plus the OPEC reducing production. Look, OPEC's been increasing output for a while. And so once we saw that OPEC started saying, look, we don't need to keep increasing output. In other words, we'll level off the output increases. And then now you start to see civil unrest, like you mentioned with Kazakhstan. I'll tell you what, I have been steering clear of crude oil, but a number of the traders in my room said, "Hey, Rog, we've got a 1, 2, 3 that happened, right? We have a 1, 2, 3 pattern right here, yellow environment. Here's our breakout. Isn't this just a culmination of that 1, 2, 3? Even though we're still largely in chop." And the answer is yes. I have not been playing crude oil. I think we can continue higher to the point of control. You mentioned 80. I think 81.5 is an easy shot. Notice why I'm picking that level. It's a volume ledge, right? Look at that volume ledge out right there. And then this white line is known as the point of control. All right. So I think we have a pretty clear shot at this point to that level since the 1, 2, 3 break. Okay. And you can also see the 1, 2, 3 broke with the Darvas. That's the best kind of 1, 2, 3. When the Darvas says, yep, that's where the resistance is. We get the pattern, right? And it's happening. That break happens in a neutral market environment, which is so important. If what I just described is completely foreign visually to you, no worries. Over at the countdowntrader.com. So it's just www.countdowntrader.com. We have, I think Trish has worked up 3 or 4 different updates as to how to look at reversal. This is a reversal, and continuation 1, 2, 3 patterns, a classic Dow pattern that I've been using since my teens. It was actually one of my first patterns I ever learned. And so you can go learn about those over at, in fact, if you Google Countdown Trader Dow 1, 2, 3, you'll get all the different hits in terms of the links back to that blog that explain how to recognize that pattern. So yeah, I think 81.5. Let's look at that volume ledge, Chris. Yep, good eye. The unrest is for gas, not for oil. I don't know if it's crude oil's moving, Marco. Crude oil's moving for sure. Remember, natty gas, and I don't know if you mean RBOB gasoline or not, but crude's moving. So is RBOB. So if crude moves, heating oil is going to be moved. RBOB gasoline, RB is going to be moving, of course, CL. All right, next up, can we please review? Oh, I think we just did that. So Brooklyn, New York, a summary for everybody. We have crude oil on the move after a 1, 2, 3. We have RBOB also on the move after kind of not a great 1, 2, 3, but you can see it. And of course, crude and RBOB, how are they attached? Well, RBOB is coming from crude. If crude prices go higher, so do RBOB. RBOB can move without crude, depending on demand and traffic patterns, all of which we can look at. But natty gas, though, is its own thing. Natty gas is absolutely its own thing, meaning natty, the number one producer for natty is really the US or Russia, depending on the output. And the other interesting thing about natty is that it's already passed its seasonal rally, which started in August. And it's really just sitting flat down in this area in a downtrend. So I'd be very, very cautious. Natty is just such a separate narrative. Okay. All right. Moving on. Thank you for the questions. Where can I find the JT Multi on TradingView? So 8th Trader, TradingView is kind of fussy about who can actually put indicators built in to their platform. So I believe in the past we've tried to do various things like that, and it just frankly, I don't think it got approved. I don't know. So, what we do is we put and just because it's easier for me to manage, I can't be supporting, thousands and thousands of traders. So what we do is we put the indicator. It's available on Toss, on TradingView. We also have a version for TradeStation 10, and we put them in the room drives for the rooms that I am consistently in. So the Sector Secrets Mastery, I think we have a version, I don't know though, in the futures room. So at some point, I have a lot of free indicators that I make available. At some point, the management of that becomes really overwhelming. So we've just kind of narrowed down the group. So it's in the room drive. It's in the room drive. So it's free to members. But it's the slow stochastic. Michael, same answer. I have actually shared how to set up my slow stochastic for years. In fact, we have a little document that we've had available for, I think, about 4 or 5 years now. It's a 21K 3D slow stochastic, and you can set that up on any platform. However, I was actually telling the members, and it's a personal problem. I have cataracts. I have cataracts in both eyes. I have early onset cataracts. You might say, Rog, what does that have to do with anything? I need a lot of color on my charts to see things, and it's getting more challenging the older I get. So the only thing that I've really done, 2 major tweaks to my stochastic. If you're wondering, Rog, what's the big difference? Yes, it's color coded, so I can actually see the reds and the greens a little bit better versus just seeing the crossing through the 80 and 20 area. If you're wondering, Rog, why all the lines and dots and colors? It's just easier for me to see. And then I also, and this is something that Lorna bought, we call her the bot. Lorna, whom those of you that are in the rooms know her very, very well. Lorna actually said, Rog, you love EMAs. Why not tweak the slow stochastic to reflect the EMAs? So like I said, I will always be an open book about the indicators on my screen. I always have been, which is probably why they've been so prolifically ripped off throughout my career. So I've always told everybody, this is what it is. This is how it's calculated. So that's the changes that we made. It's based on EMAs, not SMAs. And I just have that color coding so I can see the fast and slow interacting, and it changes color. But the real gem is, when are we below 20? When are we above 80? And then when do we respectively cross down? And that's that read of the stochastic. But remember, stochastics don't know how to deal with trends. So in a downtrend and an uptrend, you do not want to look at stochastics. They're ideal for chop. Oscillators work best in oscillating markets, right? So I hope that makes sense. And yes, this version, the Raghee can't see so well version, is in the sector room. All right. And by the way, I was chatting with Trish yesterday. We're going to push that through to those of you that already have the indicator bundle. I know a lot of you picked that up last year. If you have the indicator bundle, we're going to push it through into there too. So we'll make it available to those of you that already have the indicator bundle. So we're always updating that thing. So if you already have it, I just look, maybe the next couple of weeks, we're going to push that through and you'll have it available in there. All right. Next up is, let's see. Do I have a Telegram channel? No, you want to know where I'm hanging out, Mohammed? I'm in my chat rooms. I'm hanging out with my Sector Secret Mastery folks, hanging out with the futures folks, the options folks. I'm going to be in the day trading room today. But if you want to interact, this is the place. We're going to expand Charts and Coffee in 2022. We're going to have longer form episodes that are a little bit more longer form commentary and a little bit of instruction, as opposed to what I love doing with you all, which is interacting with Q&A. But no, if you want to know what I'm doing, countdowntrader.com. Trish keeps that updated with the best of the best instruction and indicators and use of those that are applicable to what I'm doing right now. We're going to have a stochastic update next week, I believe. The rooms and right here at Countdown Trader. So we're out there. Plus, I'm all over social media like everybody else. All right. So Brooklyn, I do not have a bullish play on natty gas. Cannot in a double red environment. Adam asked, how do I set up the volume profile to show the ledges? So I'm on TradingView, Adam. So you do need a paid version of TradingView, even the minimal version. I happily pay for TradingView. By the way, any package that's a third party, whether it be the way that I track trades in the rooms, using Wingman Tracker, using Trader Sync, or using TradeVit, whatever, whether it be if it's something that costs, I pay for it too. I'm never going to ask you all to pay for something that I'm not paying for either. I usually like to let you all know that. So, having said that, I've been paying for TradingView for years and years. I've been using it for about 8 years now. When you do pay for it, within the indicators, you'll see the built-ins have a volume profile. I use the visible range. All right. Hope that helps. That's a popular question. It's gorgeous on TradingView. That volume profile, the ledges are beautiful on TradingView. And what am I looking at? I'm quite literally looking at those volume profile levels shooting off to the left. Which ones are sticking out further? I mean, that's really it. Try to make the visual as clear and simple as possible, and I do love that. All right, gang, I've got to head on over to the rooms. Time for the day job. Thank you as always for joining us here at Charts and Coffee. If you have questions, if you have comments, leave them here at the channel. Smash that like button on the way out. Remember, we've got free videos and lots of very cool updates over at the Simpler Trading YouTube channel. I mentioned the crude oil update and the 2022 update, where I talk about how to set up the slow stochastic and the seasonals that influence January. If you check those two out, I think you'll have a pretty good idea of what I'm focusing on for the month. All right, be good to each other. I'll talk with you all in tomorrow, same time, same station.